What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we're going to be taking a look at the terrible scenes of China over the last couple of days in particular. Why a lot of Chinese stocks were down the last couple of days, although today they are all seeing a rebound on a day where most stocks are down, and why there's probably going to be some short-term trading opportunities here, and why you're going to have to take a good long look at some of your long-term positions, especially in these Chinese companies going into next year. If you've been on the internet at all as of late on any of the stock type websites, there's a lot of talk of recession now. There's a few analysts out there saying they expect some decent things 2023 early and the end of 2022. The majority of people are speaking towards further recession, further stock markets going down. So you gotta be in the loop. Gotta ask yourself, what am I gonna do with my own portfolio every single day right now, baby? Really quickly, could I ask you guys to hit that like button? I really do appreciate it. It really helps me out a lot. Why do the ads keep changing on the screen? First it's North Face, and now it's trying to sell me a watch. Man, it's a recession. I can't buy a watch in this economy. And please do subscribe if you're new around here and would like more content, my friends. So one thing just to speak about, the premise, the whole video here, we're going to spend a lot of time speaking about NIO, but China's Roni protesters censors play cat and mouse game online. So if you're not aware of what's been going on at all, we'll go through just quickly here. Chinese internet users and government censors are engaged in a cat and mouse game to control the narrative around the country's anti-zero Roni protests. Okay, protests began in the capital of the far western Xinjiang region on Friday, following the deaths of 10 people in an apartment block fire before spreading over the weekend to major cities. Now, the thing about this is, guys, there was footage circulating of a fire truck that physically was not able to reach the building that was burning because of some things that were in place because of the whole zero Roni measures in place. There's a lot of horror stories as well right now. I mean, fire exits being blocked off, terrible things going on basically, and we can see people really starting to revolt, really starting to fight back. When you consider the numbers that are over there Roni wise right now, they're still quite small all in all, but it's not looking great. Yeah, the protests erupted after footage posted on social media showed fire trucks spraying water from too far away to reach the apartment building, with internet users claiming authorities could not get closer due to pandemic barricades and cars that had been abandoned by people who had been quarantined. I mean, that's just terrible. Now, what does this mean for stocks? So yesterday it was a poor day for Chinese stocks all in all. Today we see a headline here: Alibaba, Tencent lead Chinese tech gains even as zero Roni protests continue. Now, this was a quite weird one, considering a lot of broader markets aren't looking the best today. You wouldn't have expected these stocks here in particular to be going up, but they are. And then we can see the same here with NIO, up 2.3% on the days. Now, what does this say to me? It really just says expect even more volatility potentially in these Chinese companies, in your Alibabas, in your Tencents, in your NIOs, for the next while at least. With the amount of variables that can make stocks move in this current climate, with everything that's going on in the US, in Europe, with all of the crises going on around the world, this is just one more variable thrown into the loop for Chinese stocks in particular. So yeah, just be careful. Now, if we bring it over specifically to NIO, I think everybody knows they have performed very, very poorly over the last while. I mean, it's been a terrible nearly 2 years now since the peaks, but even the last while, if we go back to the start of October, they're down from $16 to $10. They were at sub $9 for a while. It's been really, really bad. And the sad thing is that it might be tough for things to get better in the very near future with everything that is going on in China right now. So the resurgences of Roni in the capital city of Beijing signals to investors that movement curbs in China are here to stay. This would undoubtedly negatively affect NIO's ability to create additional shareholder value, which is very important, as its production facilities could be shut down at any time by the officials, which is a really scary thought. And you know, last time we were really seeing this was the start of the Roni that was going on in the US, in Europe, everywhere. A lot of things had to close down. But at that time, it was everything. Everything was being closed down. It wasn't just randomly, it could hit you and put you in a worse position than your competition. And constant lockdowns, along with the need to reinvest the available resources into expansion, would continue to hamper NIO's ability to become profitable in the foreseeable future. Now, I want to say one other thing as well. Literally, only a few weeks ago, we got China's BYD to launch a new premium electric car brand in 2023. Now, things have gotten worse over in China since the 8th of November, 3 weeks ago pretty much. But I'm interested to see if we're going to get an update here. And if we are, I think that BYD is going to become the most popular EV stock for people to invest in for a considerable period of time until things are a lot better in China. I know it's already very, very large by far. But I think you'll see people going from your Neos and stuff into BYD. If they can actually come out and say they're going to do this in this climate, that's going to instill a lot of confidence. But just earlier this month, Neo was required to shut its assembly lines in its production facility in Hefei due to the resurgence of Roni there as well, which is more than likely going to lead to the company's weak performance in Q4. It's not going to be a good quarter, guys. It's that simple. I would expect some pain. I would expect a lot of puts to be printed, I'll put it that way. Add to this the fact that in order for Neo to successfully expand its market share, it constantly needs to reinvest the available resources into the launch of new models, and it becomes obvious that the company is unlikely to realize its global ambitions in the current environment anytime soon. And that is what is scary. Going forward, there's 7 challenges Neo is facing. This is what you need to be aware of as an investor. In addition to improving the lineup of its electric SUVs to expand its market share within the high-range market, Neo is also actively trying to access the mass market by increasing the lineup of its electric sedans. Earlier this year, the company already released 2 new sedans under the ET7 and ET5, and it plans to offer additional models in the following years, which is fantastic and is something that any Neo investor who's been following them for a couple of years wants to see happening here. On top of everything that's going on here, we'll come back here shortly. Tesla is decreasing prices for some of its models in China. That could spark the beginning of a price war due to increased competition within the industry. And I mean, Tesla is going to be able to take this price war a lot further than the likes of Neo. It just depends how far it goes. It depends how much brand loyalty there actually is to Neo in China as of right now. And it depends if, you know, maybe Tesla won't be able to do certain things in China due to everything that's going on over there. We're just going to have to wait and see. But I would say that is going to be a huge challenge for them. Because with Neo, it's not exactly like they have a huge cash reserve and can afford to operate at a loss while putting all of this money into R&D for too long without doing more, you know, cash raises down the line. And with that being said, Neo is more than likely once again going to dilute shareholders by selling additional shares in the foreseeable future. Slightly more than a year ago, Neo already raised $2 billion at the market offering, which right now works very well. Cash reserves went up to $8.3 billion at the end of Q4 21. However, due to constant need to fund its expansion, most of those reserves are already gone. Since at the end of the latest quarter, its cash reserves stood at only $6.3 billion. So you see the picture here. It's like if they're going to be randomly closed down and they don't have the cash reserves to be able to afford being randomly closed down too many times, it's just going to dilute share price even further, alongside the fact that it's already trading in a downward position due to the market conditions. For Q4, Neo expects to deliver a total of 43 to 48,000 vehicles, and this is why, again, I think it's going to be a bad quarterly result for them, sadly to say. The problem is that in October, it managed to deliver only 10,000 vehicles, down 7.5% quarter over quarter. And after requiring to shut down its plant at the beginning of this month, it's more than likely that its November deliveries will be down as well. And I mean, yeah, it's not looking fantastic in the short term, even given the fact that they are now down in the $10 range. I mean, I initially started covering them back around these levels somewhere. I think they were at the $4 or $5 mark the first time I ever spoke about them. And then I initially didn't like a lot of what they did, and then ended up jumping in the 7s or so. And then, boom, we were looking good since then. And then I was one of the few people on YouTube who turned bearish on Neo when I saw certain things happening here. It looked like big money manipulation. And yeah, obviously, geez, all the way from 67 down here. I'm not a genius for pointing that one out. I've got a lot of EV1s wrong, and you could have pretty much been bearish on anything over the last 2 years, and you would have come out right. But yeah, what I would say is that I can't be anywhere near as bearish now that these gaps are filled in and that the price has come down so much, and they are in a much bigger position than we were initially covering them in the $4, $5, $6 ranges. But I do have my concerns, the ones we just spoke about in particular. The cash situation just is important and is going to have to be addressed at some stage for investors to be confident in them, in my opinion. But anyway, my friends, that's my update on Neo in particular. I'm going to try and make another Neo video in the next week or two, speaking about some of the actual better things that are going on and the future catalysts, because I know this video was a little bit, ooh, everything's bad. No stock is anything ever completely bad or completely good, so I'll try to do that relatively soon, my friends. If you watched all the way till the end, you, my friend, are a true legend, and I really do appreciate you being here from the bottom of my heart. Your support means the world to me. If you did enjoy, please do hit that like button and subscribe for more content. I hope you have a beautiful, blessed day. I'll see you in another video very soon. Peace.